Hello traders, I'm James Harte and welcome to this Orbex Market Insights video where today we'll be looking at the FX majors focusing on pound dollar and dollar yen, and we have plenty going on that is affecting these two pairs currently. So of course the main driver for the pound at the moment is the ongoing Brexit negotiations. Now, while the situation is very fluid and subject to changes, the current landscape is that the EU has offered the UK a 2-week extension to the current March 29th deadline, giving it up to April 12th to agree a deal in Parliament. Now, if it can do so, the government will then have until the end of May before officially leaving the EU, therefore extending the current leave time by 2 months. Now, there's a great deal of uncertainty currently weighing on the pound, as it is still highly uncertain whether Theresa May will be able to agree a deal, and this is currently causing plenty of fluctuation in the pound. The Japanese yen has also seen plenty of volatility recently, despite the strong rally in the US dollar seen following the FOMC meeting last week. Dollar yen has been heavily sold over the last couple of days as the Japanese yen has strengthened on safe haven inflows. Indeed, a reversal lower across global equity markets has caused a flood of demand for the Japanese yen, despite recent dovish affirmations by the Bank of Japan. However, this morning what we've seen actually is a reversal in this dynamic, with equities prices recovering ahead of a further round of US-China trade talks, and so this has taken some of the safe haven demand out of the Japanese yen at current levels. Okay, so let's jump in and take a look at some technical analysis, and please remember that losses can exceed profits and that opinions shared here do not constitute investment advice. Okay, so look, starting with the pound dollar then on the H4 charts, and you can see first of all that price continues to trade within this broad bullish channel which has framed price over the last few months. However, for now, this mid 133s level is still providing resistance. So essentially what we've been looking at more recently is an ascending triangle, with price rising along this rising trend line here and being capped at this static resistance level. So for now, focus remains on an eventual break higher above that level, but obviously we have plenty of two-way risk in the market around Brexit, so traders need to be cognizant of this. If we drop down to the H1 charts here, you can see that we're currently seeing a bullish breakout from this bearish trend line from the mid-March highs. So price tested above the trend line last week but failed and traded back inside. But this morning in the rally you can see that price has actually broken out above that bearish trend line again, and for now we're just challenging yesterday's high around the 132.40 mark. So this is backing up what we were just looking at then on the higher time frame, and if price can hold above this level, so hold above this broken bearish trend line and hold above yesterday's structure high, then this keeps focus on an eventual move back up to the mid 133 levels, though as I say there is plenty of two-way risk in the market at the moment with Brexit, so please do keep an eye on the blog and we'll update you on all of these developments as they come in. Looking at the dollar yen then on the technical chart, okay, so you can see we've got the H4 chart here to begin with, and you can see what's most clear here is the change in sentiment that we've seen over the last couple of weeks in the dollar yen. So the rising trend line from last year's lows, you can see that has underpinned price action up until a couple of weeks ago, was broken last week. You can see price topped out around this region here. We broke down through the rising trend line. You can see that we've had quite an orderly sustained sell-off ever since. So price broke down through that rising trend line. We've recently broken down below the last two swing lows in the bullish phase at 110.80 and 110.36, and at the moment you can see that price in its current recovery is challenging this 110.36 level. So if we drop down to the H1 chart then, you can see we're just currently sitting back above that low. So for now, the focus is on continued downside in the dollar yen. You can see that we've had this really well-defined, really structured bearish phase with fresh lows, lower highs, fresh lows, lower highs. So unless we see a break of this structure, then we are likely to see a continuation lower. However, for now, we are looking at price sitting above this 110.36 level. So we have to be open to the fact that price could run back up as high as the 110.80s level, though again, still looking at an eventual reversal here and a continuation lower. So really, it's only going to be above the 110.80 mark that this bearish bias is going to be alleviated. Okay, so as I say, please make sure to stay tuned into the blog each day, and we'll update you on all of these key developments which can impact your trading, doing our best as ever to serve traders responsibly. I hope you've enjoyed today's Market Insights session and found the information useful, and I'll catch you again soon. Thanks and goodbye.